Hey guys, what's happening? Eric here, Mr. Fired Up Wealth. Wanted to give you a quick update. Today is February 24th, 2020. Obviously, the market is getting crushed right now. The NASDAQ actually opened up down 4%. The Dow Jones is about 3% down right now. The NASDAQ is down, 3.37% currently, and the S&P 500 is down 2.85%. It's recovered quite a bit from where it opened up. I actually put a bunch of orders in at the open, and I'm going to show you in a second what I bought today. I put some money to work. You can see Amazon's down 4%, Apple, all the big names, all the FANG names are down about 4%. Microsoft's hanging in there at 3.3. Pretty much everything, guys, is red except for Gilead and a few REITs and a couple here and there. Looks like Clorox is up. Anything related to the coronavirus. Gilead's up about 4.7%, of course, because of their potential drugs that might be helping with coronavirus. The reason that we're dropping today, of course, is the coronavirus fears. We had more cases in Italy. There's several cities, towns in Italy that are quarantined. We've had several deaths there. And then in South Korea, we've had a large uptick in number of cases as well as deaths. And it seems like it's accelerating in certain countries, and obviously has got people very, very, scared. Japan is where the Olympics are this year. Another thing that was in the news this weekend is what happens if the Olympics get delayed or if they get canceled. Obviously being in Tokyo for this year, it's only about 145 days away. That would definitely, add more widespread panic to the market. So obviously the media is doing what the media does, and they're spreading that fear. With that said, guys, there is some risk. Obviously, there's going to be risk to global growth, and if this continues to get worse, we certainly could go lower than this. But with that said, I did put some money to work this morning, as I said, and want to show you what I bought. So I always dollar cost average, so I'm not going all in here. I still have plenty of cash to put to work. I put maybe 15-20% of my dry powder, my cash to work. I bought some more shares of Trade Desk, which I own quite a few shares already, but I added another 5 shares, another $1,400 or so. You'll see VU on here multiple times because there's different accounts. So I've got more than one account within Fidelity, a couple of retirement accounts in there. But most of what I do, everything you see except for the multiple VUs, are all in my taxable account. And added some Qs, have a bunch of that as well. Added a couple more grand of that. Added some more Visa, added some more MasterCard. Added Sky ETF, which is cloud computing ETF, First Trust. I like that one a lot. I added $3,500 in that one. Lit, which is has about 12.5% exposure to Tesla. It also has some of the battery stocks and some lithium miners. So it's kind of a Tesla, kind of a safer Tesla play for me, a little bit of a hedge in that space for electric vehicles. And then Arc Web, which has, Tesla in there as well, but it also has, things like Twitter. It's got things like Twilio. It's got things like Splunk, Zillow for real estate. There's a bunch of disruptive technology in there around, ArcW for web. It's cloud-based and internet-based, disruptors. And then the SOX, which is the ETF that I like to buy for semiconductors. That was down, I think, almost 5% when I grabbed about 2,500 more shares. So most of these are just adding to positions I currently have. You can add it up and see. I did put some work, cash to work. Warren Buffett was on this morning on CNBC, and he basically said, obviously, if you're not needing to sell your stocks in the next 10 years, it's a great day to buy. He added that 3% isn't a huge drop, but it's definitely a discount. And some of the names, like Lam Research, which is a great quality stock that's going to be impacted from China. They develop semiconductor equipment so you can manufacture semiconductors. They were down 9% pre-market. So, obviously if you're buying just index funds like this, it's going to be maybe a 3%, 4% sale or discount. But some individual names, even like AMD was down over 5-6%. So depending what you're buying, there's definitely, some sales. Could they go lower again? Yes. And that's why you dollar cost average. But if you don't need to sell anytime soon, today is a day where I at least dip my toe, put some cash to work. If it goes lower, I've got more cash and I can put that cash to work. If you haven't subscribed, I appreciate it if you do. Click the subscribe button on the bottom right-hand corner of your screen. Also check out the Facebook group if you haven't. But I do videos like this occasionally. My main objective is long-term investing. I like to use growth stocks, like bigger names like a ServiceNow or a Salesforce or a Splunk. Even Microsoft I've been in for a long time. Microsoft's not a great example because it is DGI, but the ServiceNows and the Splunks and the Amazons and those type of growth stocks that don't pay a dividend, I use those to outperform the S&P, outperform the market. I sell profits. I take those profits and I buy DGI stocks. So stocks like Home Depot, Costco, Nike, things that I can hold for, long-term 5, 10, 15 years. And I also have a core position of ETFs that I use as well. So I am a long-term investor by nature, although I do day trading. I do some options trading as well. I've got some separate accounts, so I do mix it up on the channel. There's a series right now on dividend growth investing, top 60 dividend growth stocks for the next decade. Take a look at that one. There's also lots of videos about growth. There's even a whole playlist on legalized marijuana pot stocks if you're into that. So thanks for watching. Have a great rest of your day. Take care.